welcome to this TradingHD webinar, The Psychology of Trading, presented by myself, Steve Ward. Just before we start the webinar tonight, there's just a disclaimer and risk disclosure just to be aware of. The information contained within this presentation is intended for educational and illustrative purposes only and does not constitute investment advice. Do not make any investment decisions or other decisions based on the material presented. We cannot be held responsible for your trading results. For more information, please visit www.tradinghd.com. So welcome to this webinar. My name is Steve Ward. I'm a trading, performance and psychology coach. I've been working in the trading and investment field now since March 2005, so almost 11 years. I spend my time working with traders and fund managers from banks, funds, energy companies, proprietary trading groups, and do presentations and some work with retail traders as well. Travel all over the world, working with traders right through from sort of newer traders, graduates and trainee traders, all the way through to very experienced traders trading 20, 25 years and even more. Prior to working in trading, actually, my main interest in psychology was sports and performance psychology. Worked with athletes and teams in over 30 different sports all over the globe, which I thoroughly enjoyed. I've done some work in corporations around leadership and team building and peak performance, and have worked as a psychology coach in professional poker. I'm the author of 3 books, Sports Betting to Win, High Performance Trading and Trader Mind, and spend my time generally traveling the world, as I say, working with traders and trading related performers. Tonight we've got a session really looking at trading psychology, the mindset, I guess, of trading. And we haven't got a lot of time, so I'm going to try and give you a broad overview of the topic and try and blend a bit of theory and some information, but also try and give you some practical tools and techniques to take away. So you might want to make sure you've got pen and paper handy so you can jot some things down. Let's have a start just by thinking around the theme of trading, success, and discipline, all important words. Let's have a think about a winning trading strategy, and here's the first one that I want to give you. So, buy low, sell high. That is definitely a winning trading strategy, or of course you could do the opposite. And we all know that. This is, I think, the interesting thing about trading is that conceptually, the strategies themselves don't have to be overly complex. Conceptually, people understand that we have to run our profits, we need to cut our losses, we need to make more than we're losing. All of these, I guess, are common sense. They're key concepts which underpin successful trading. I think it was Warren Buffett that said, trading is simple but not easy, and that's because it's knowing the concepts, knowing what to do is one thing, but actually being able to do what you know consistently, to follow your trading strategies across, a variety of different market conditions and different performance contexts is very, very difficult. This is where, the strategy can be relatively simplistic. The following the strategy over time is a bit that's not so easy. And let's have a little think about why that might be. So if we look at what it takes to be successful, and this is true across performance arenas, there are 3 key factors, the 3 S's. The first one is that you need to have the relevant skills and knowledge to do the job. And obviously the more skills you've got and the more knowledge you've got, then the greater your performance potential becomes. You also need to have an effective strategy, a way of executing your trading skills. This is true whether it be football, the military, whether it be performing arts, whether it be trading, but we need some way of bringing our skills into the performance arena. And actually a lot of training historically in sport and in the military, and I would say probably the bias still at the moment in trading, is focused around giving people skills and strategies. But we know through observation and our own experiences that that's not enough, because we see highly experienced, skillful sports people, people in the military, in poker, in the performing arts, we've got high levels of skill and high levels of strategy, and we see them underperforming. We see them making mistakes. And we see the same in traders as well. So it can't just be down to these two factors. And that's because there is a third S, and the third S is state. And in here we might have our physical state, our levels of fatigue, mental state, concentration, focus, our mindset, our emotional state, our levels of stress. Essentially, the state part is the psychology of trading. It's the inner game, as we might refer to it. And this really is what, once you are beyond the novice stages of trading, once you've kind of got through sort of novice beginner stages, the psychological factors are going to be probably causing the biggest variance in your trading returns. Once you've got the skill and the strategy, then the variance, how much of your strategy returns you're extracting from the market are going to be a function of your psychology, of your state. So this is where it becomes really important. Initially, if you're a newer trader, you're going to get a lot of bang for the buck just by really focusing on developing the skills and the strategy first. And if I don't know how to even kick a football or how to take a penalty, then whether I can stay composed in front of 80,000 people is less relevant. So it's definitely a skill, strategy, and then state process. But to be a successful trader, to maximize your returns from the markets, you need to have developed skills in all three areas. It might be something for yourself as a takeaway to think about those three components and to think about maybe your strengths and your weaknesses in each area. Do sort of like a little bit of an audit. What skills have you got? What strengths have you got around skills and knowledge? Where are the limitations? Where could you improve? What are the strengths of your trading strategy and approaches? Where are the limitations and the weaknesses? And likewise for your state. And that will give you some clues as to, first of all, what you can build on, so you can build on your successes, and it will give you some clues as to what you can do differently, skills that need developing as well. Now, I think it's about 2014 I did this. I did a study, a survey, with 240 traders. A lot of these were professional traders, some were retail traders, but and a mixture of kind of beginners right through to very experienced and very successful traders. I was really interested in, what do you think is the main factor that stops you from maximizing your market returns? And so I asked, is it your skill level and knowledge? And we had, 9% or so people there. Then I asked, was it your trading, stroke investing strategy? Do you believe your strategy is the challenge? And that was probably, what do you think there, maybe 3%. Then I asked them about situation. So, what do you think about the environment you're in? So it could be the institution, the organization, whether you're trading from home, but what about that environment? And again, it's probably about 5% of people. Then I asked, is it the markets? Are the markets the challenge? And that was probably 6% of people. But we can see that overwhelmingly, the biggest barrier that was stopping people maximizing their market returns was themselves, 75%. That was by far the most popular answer. That was mindset, emotions, impulses, urges, habits, behaviors. And so, it leads us to the question, what can we do? How do we improve this area so we can make it less of a factor? How can we reduce the interference? There's a guy called Tim Galway. He was a lecturer at Harvard, and he also coached the tennis team. And he wrote a great book called In a Game of Tennis, if you get a chance to read it. And he had in there a formula, PE equals PO minus I. Performance equals potential minus interference. So that, at any given time in the markets, you can only be as good as you can be minus any interference you're experiencing. And Galway talks about how a lot of that interference is internal. It's our thinking, it's our emotions, it's our impulses and urges. So that's what we want to kind of work on. And that's what we'll have a look at today in our webinar. Now, what we see in terms of this interference is the impact on trading behavior is we see a variety of challenges which we come, so we see traders cutting their winning trades short. The setup's good, but we get out of the trade too early. Maybe the market ticks against us, or it just takes a bit longer than we thought it was going to take to move up towards our profit target. The uncertainty comes in, the anxiety comes in, we hop out of the trade.